5 sessions. That is all that stands between now and April 1st notice day on COMEX silver. 429 million ounces of paper obligations, 78.95 million ounces of real, registered, deliverable metal, a coverage ratio of 13.7%. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, the clock on April delivery is running. 5 sessions. Let's get straight into it. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today. COMEX April silver delivery mechanics. First notice day arrives in 5 trading sessions. As of today, 1,927 April contracts are open, representing 9.6 million ounces building toward delivery. First notice day is the first date a futures seller can issue a delivery notice to a buyer still holding long. Contracts open at FND are obligated to take delivery or roll. The number that matters is what happens between now and that date. In January 2026, standing for delivery accelerated sharply as FND approached. 33.45 million ounces were withdrawn from COMEX vaults in a single week. A single week. Think about what that sequence actually means. If April sees even half that volume, registered inventory drops from 78.95 million ounces to approximately 62 million ounces. That pushes the coverage ratio below 10% for the first time in modern COMEX history. The timing is what deserves scrutiny, not the event itself. The timing. The ones paying attention already know what to watch next. Before I build the full data picture, consider this. In 2020, COMEX registered silver peaked above 300 million ounces. Today it stands at 78.95 million ounces. That is a 67% decline over 3 to 4 years. The paper open interest has not declined commensurately. That divergence is the entire story. Now let's build the full picture, because April 1st notice day does not exist in a vacuum. CME Group's own published data shows total silver open interest at 429 million ounces. Registered silver, not eligible, not total warehouse stock registered, is 78.95 million ounces. The COMEX stress index derived from CME's published data stands at 84 out of 100 as of mid-March, near its all-time high. Shanghai Futures Exchange physical silver is trading at approximately $73 to $75 per ounce in USD terms, $4 to $7 above COMEX spot of $67.34 to $69.28. That 6 to 10% Shanghai premium is not a temporary anomaly. It is the market signaling that physical metal is genuinely scarce at current price levels in the world's largest silver-consuming market. Every ounce shipped from COMEX vaults to Shanghai to capture that premium is one less ounce available for April delivery on COMEX. Turkey imported 273 tons of silver in January 2026 alone. China's Shanghai Gold Exchange continues processing record physical volumes. The rate of registered inventory drain is not slowing. It is compounding. The data is doing the talking, the ones who were called alarmists for pointing to COMEX structure 18 months ago. They are not saying much right now. And here is what makes that picture even harder to ignore. The paper-to-physical ratio has moved from historically elevated to historically unprecedented. 429 million ounces of open interest, 78.95 million ounces of registered silver. That is a 5.4 times ratio on total open interest. On April front-month deliverable contracts against registered stock, current CME data modeling puts effective leverage at 7.3 times. At the same time, fast money remains net short silver on a carry-adjusted basis, actively suppressing spot price. Physical accumulators, sovereign wealth funds, central banks, industrial users with long supply contracts are on the other side. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups can take a long time to resolve. What this data tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Now the macro variable, because this is no longer a backdrop. It is the primary variable. Here is the number most people are not focused on right now. 45%. Silver spot has fallen 45% from its January 2026 peak of $121.67. That decline was driven entirely by macro forces, not physical supply. DXY at 99.35, 10-year Treasury yields at 4.37, to 4.42%. The Federal Reserve holding at 3.5 to 3.75% with zero rate cuts priced for 2026. Real yields are near their highest level since 2007. Non-yielding assets like silver-faced genuine carry headwinds in this environment. That is the mechanism suppressing paper price. Here is what that mechanism does not do. It does not increase registered silver inventory. It does not reduce the 429 million ounces of open interest. It does not move Shanghai buyers off their physical bid. Markets are currently pricing a smooth April delivery cycle with open interest rolling without stress. Look at a 13.7% coverage ratio and tell me what probability you assign to that outcome. When the macro suppression lifts and DXY below 98 is the signal, silver reprices toward physical reality. That is the historical pattern. Every time paper leverage of this magnitude has met a delivery stress event, it has not been different yet. Silver COMEX spot at $67.34 to $69.28. Shanghai physical at $73 to $75. A $4 to $7 premium. Short-term picture. Honest raw assessment. The paper price is macro suppressed. The physical price is supply constrained. Those two realities are on diverging trajectories. April 1st notice day is the next scheduled collision point. If standing for delivery in April exceeds 20 million ounces, silver reprices sharply higher toward $90 to $110 within 60 to 90 days. If April delivery demand retreats below 8 million ounces and open interest rolls smoothly, paper price retests $61 support. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. The macro environment is suppressing paper price while physical conditions tighten. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. April delivery demand retreats below 8 million ounces. Open interest rolls without stress, and the squeeze is delayed rather than avoided. DXY breaks above 101, real yields hold elevated through Q2, and paper silver retests $61 support. Institutional fast money short positioning continues suppressing spot price as the macro headwind overwhelms the physical story near term. The bull case is equally real. Standing for delivery in April exceeds 20 million ounces, eligible to registered conversion stalls, and the COMEX coverage ratio drops below 10% for the first time in modern history. Shanghai premium widens above $10 per ounce. The arbitrage mechanism remains broken, and Asian physical demand overwhelms Western paper selling. Turkey, China, and India's sovereign accumulation absorbs institutional ETF outflows and reasserts the structural bid. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. 429 million ounces of paper, 78.95 million ounces of real metal, 5 sessions to first notice day. The structural pressure is already built. The only question is whether April is the month the paper market catches up to what the physical market already knows. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group at cmegroup.com. Shanghai Futures Exchange at shfe.com.cn. Federal Reserve Economic Data at fred.stlouisfed.org. Logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0, out.